Welcome to America's Commercial Real Estate Show, your source for market intel, forecast, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This show is brought to you by the CCIM C5 Summit. Got to check out this event. It's going to be in Hollywood, Florida at the Hard Rock Hotel. It's September 17th to 19th. The website is c5summit.realestate. If you're in commercial real estate, you should be there. And why not be in Hollywood, Florida in September? I'll be there. Please say hello. Again, that website is c5summit.realestate. Well, today's show is going to be called The Demise of the Office Sector. Look, everybody says the office space is dead. No one's going to want to work in the office anymore. And we're seeing some challenges in the office market. While a lot of office is doing well, there's a tremendous amount of office that's not doing well. There's more foreclosures happening, more owners giving the keys back to lenders when they can do that and walk away. Myself, I sell office buildings mainly around the Southeast U.S. We're selling some properties for big money. We're also selling some foreclosures that are so cheap that it's bewildering to me. But let's talk to an expert who watches the economy, watches the market, and is someone that you're familiar with if you've been listening or watching this show for years. Please welcome Mitch Roschelle. And Mitch is Chief Strategy Officer for Madison Ventures Plus, and you've seen him on Fox Business News and all sorts of other business television shows. Mitch, good to see you. Thanks for joining us from sunny Florida.
Mike, it's awesome to be with you, and I wish I could have made it to the 404 to be with you in person, but next time, I promise.
That's excellent. Studio One. Well, maybe you can visit with us. I can't talk, in Hollywood, Florida, at the Global C5 Summit.
I may have to. You'd have to get me out of the poker room, but maybe I'll drive down for the C5 Summit. Sounds great.
Well, I'll be your wingman in the poker room, play some blackjack or something. Well, Mitch, obviously you watch the economy, real estate very closely. Love seeing you on Fox Business News. And one of the things that a lot of the headlines are really bad about commercial real estate or really negative. And then, of course, there's a lot of negativity around office space. And some people say it's dead forever. It's not coming back. No one's going to want to work in offices anymore. What do you say?
Yeah, listen, the people who go on television, present company excluded, who have been talking down the real estate asset class in general for the last, maybe 2 years since interest rates have been, climbing up, have all been dead wrong. And emphasis on the word dead, to be honest with you, because I don't see it. Let's talk about the office sector for a second, and this is my thought process. The average lease length in this country is somewhere between 5 and 10 years in an office building, and I'm going to make that the base term. I'm not talking about extensions and stuff. So we have been in the midst of a lease renewal cycle since we kicked everybody out of offices in March of 2020. And if you look at the plurality of those lease renewals, if you just believed what you hear about the death of the office sector, every one of those lease renewals would not have been renewed, right? But that's clearly not the case. Do some companies have too much space? Yes. Are there some office buildings that just probably shouldn't have been built? Yes. But and you and I are old enough to remember this. And in fact, I think you said before we went on the air, you've been doing this program, which is awesome, for 14 years. And I think I've probably been with you for almost all 14 of those years. You and I talked about how Amazon and e-commerce was going to destroy the retail sector. And we haven't seen that. Are there malls that should not have been built? Yes. Are there shopping centers that were part of anticipated path of growth, and the path of growth went in a different direction? Sure. But I think I was once on a segment with you, and I believe it was Ryan Severino. I don't know where he is now, but he's one of your regular guests, who said that retail was overbuilt and under demolished in America. But you know what? I repeated that line many times, but I think he's wrong, because I think that retail is doing just fine relative to the expectations. So I believe that office buildings are vital to our economy. Office using jobs are vital to our economy. And at some point, companies are going to start demanding their people get back in the office, and it's happening slowly. But here's the problem. Companies that say to their people, you can work hybrid, have the most idiotic solution to hybrid. Their hybrid model is you have to work in the office 3 days a week. So everybody's going to work in the office Tuesdays, Wednesdays, and Thursdays. Guess what? You have an empty building on Mondays and Fridays, right? So you need the same amount of space if all of your workers are working 3 days a week or working 5 days a week. So companies need to figure out better operating models for the hybrid work. And if not, they're going to still, if you had a 500,000 square foot user that had, the right amount of space for 500, thousand feet of people. Okay. What do they do on Mondays and Fridays? They still have to pay rent on Mondays and Fridays. So companies are going to have to figure out how to get butts in seats so it's not overcrowded on Tuesdays, Wednesdays, and Thursdays. And they're slowly starting to figure that out. And when they do, I think office space is going to be just fine.
Yeah, well, it's a good point. When you look back at how we all thought potentially when the internet really took off and everybody said, "Oh, retail's dead forever." I mean, everybody thought it's just almost all retail was dead forever, right at the time, and now it's just going in most markets. I know in most areas, obviously there's some distress, but retail is it's like we're dealing with a bunch of retail tenants finding them space in Atlanta. It's hard to find them good space.
Right. Now, listen, there's always going to be real estate as an asset class has evolved over time from the days when people lived in grass huts to what people live in today, right? The asset class evolves. Office buildings have evolved. The way they're designed, the way they're used, all of that changes over
Yeah, I
time.
mean, you should see my
So
grass hut. I have lights on it and stuff that
you do?
sparkle. Yeah,
Yeah. Yeah. See that? So you're still living in a grass side. So maybe you haven't evolved, Michael, but the rest of the world has.
yeah.
But I truly think it's just part of we're just watching change happen. And I think that most of the change that happens, in our lives happens so slowly we can't see it happen. But that's not modern times. Modern times change at a pace that you can actually visualize. And we're seeing it change. That doesn't mean there's an end at the end of the rainbow, right? There's probably gold at the end of the rainbow. People just have to figure it out. But, lenders have to sort it out. Borrowers have to sort it out. Landlords have to sort it out. Tenants have to sort it out. There's a lot of counterparties that need to sort this out together. And if they can figure out a clever way to collaborate around this and not sort of point fingers at one another, this all can work.
Yeah, that's a good point. Hugh Kelly, if you're listening, hello. Hugh Kelly's been on the show, and he's mentioned that look, we're human beings, and we get impacted by what's around us, and it's been around us now for a few years that no one wants to work and no one wants to be in the office. And he said, you can. Human beings can start to think that that's going to last forever, and you made a point earlier, like to give us some more thoughts on it. Think back of '09 when people's houses were getting foreclosed on and everybody thought houses were gone forever. I mean, there was what we call a ring of death around Atlanta where they say that outside this ring, no one's ever going to build a house, right? Lots have zero value. And then what happened? Housing just went crazy.
And I'm old enough to remember, I'm not going to say how old you are, Michael, but I'm old enough to remember when downtown Atlanta was dead, when Portman, maybe I don't remember if John Portman filed bankruptcy or not, but like downtown Atlanta was completely dead and office buildings were dead and the atrium style hotels were dead. Like all of these things haven't come true. Real estate is a long lived asset. And if you look at it with enough historical perspective, you find that history tends to repeat itself and that the evolution of real estate, it's adaptive. It's adaptive asset class. And if you look at '09, what happened in '09 was reckless stupidity in lending. What happened before the savings and loan crisis was reckless stupidity in lending. Okay, it happened twice at least in my lifetime. But guess what? A fortunes were made coming out of that. Interestingly enough, I worked in the savings and loan crisis, as did you, and that's where Blackstone and KKR and all these big hedge funds actually got their start. And I mean, private equity funds, not hedge funds, buying distressed real estate from the government, from the Resolution Trust Corporation. So the fact of the matter is, fortunes can get made in complete times of disruption. In fact, Jonathan Gray of Blackstone said at an investor conference recently, now's the time to lean into real estate when everybody's running away from it.
Yeah, I mean, that's a great time. Buy low, sell high, right? It's
Yeah.
and you think, oh, rates are too high. I can't buy or sell right now. Wait a minute, rates are at historically normal rates, right? It's like, well, if you've been in the business the last 10 years or so, maybe this seems high, but it's really not.
Well, the only thing that's weird today relative to my historical perspective is that interest rates are higher than cap rates. And I don't want to fall down the cap rate rabbit hole, but for a long time, for the last 20 years, cap rates were probably higher than interest rates. And when I talk about interest rates, I'm not talking about borrowing rates. I'm talking about the risk free rate. Okay, and so there are four cap properties when the comparable treasury is at five. So that's a strange phenomenon. But what you have is an entire generation of real estate finance people who don't recall, because it didn't happen in their lifetime, when mortgage rates were 9. Okay,
Right.
for a non-recourse loan, it was 9, and that they just have to realize that you have to make returns work, not on paper. And by the way, when interest rates were that high for commercial real estate, we were just starting to use Lotus 123 and Excel and stuff as tools to model real estate. So we actually had to pencil out the deal, and it had to make sense literally on the back of an envelope or on a sheet of paper. And if it didn't make sense, people didn't do it. And then, through the advent of Argus and all these other tools, people started making deals make sense, electronically, but the deal didn't necessarily make sense. And that's why we have these
Yeah.
problems like the '09s and stuff that happened.
Yeah, I mean, I had a loan on a triplex when I was really young at 17%. And it's interesting. One of our brokers was asking me, "Hey, I've got some buyers that were saying that they shouldn't be buying commercial real estate when interest rates are high." I'm like, "Well, wait a minute. Let me ask you something. Is commercial real estate a long-term hold typically?" Yeah. I said, "Well, let me give you an example. I bought an office building. Interest rates were high. Well, guess what? I got in at a lower basis. And you know what? When
Yeah.
I look back, didn't matter what rates were. What mattered was what really was the basis and the property and its location, right? You can refinance or pay off a loan, right? You could sell the property and you no longer have the loan if you do value add. So I think there's a lot of buyers in the market right now that really like this market. They like there's less competition. Maybe some of the
Right.
REITs have
And
slowed down, right?
right. Well, the REITs, especially the publicly traded one, they have absolute transparency with their investors, and and the pricing of REITs, their stock sort of doesn't make sense. As a matter of fact, I think in many respects, REITs are probably a buy because they're oversold, because people are believing the headlines about the demise of real estate. But if the location makes sense, and you can buy a piece of real estate that's income producing, not an empty office building, but an income producing piece of real estate at a discount to its replacement cost. I just said everything you need to know about why you should buy that asset,
Yeah.
right?
Yeah. Good point.
And interest rates. So guess what? And here's a crazy phenomenon, because in my company we're raising capital for a bunch of different kinds of real estate projects, which we could talk about. I mean, the preferred returns to our equity investors are actually lower than the coupon on some of the debt on some of our projects,
Mhm.
because financing is so hard to get.
Mhm.
So equity, from a current pay perspective, is actually cheaper than debt.
Mhm.
That's crazy.
Mhm.
But if it makes sense, and the equity is willing to invest in real estate for that kind of preferred return, and obviously the total return is going to be higher for them. And that deal makes sense because the basis is low, as you said.
Mhm.
A double-digit handle on debt isn't going to choke the deal to death. Then it makes sense. And guess what? Some of the debt is prepayable, especially floating rate debt. And certainly, you may be locked up for a period of time. But I have this conversation all the time with residential home buyers where they say, now's not a good time to buy because interest rates are high and prices are still high. Something's got to give. And I said, I'll tell you what's going to give. When interest rates come down, prices are going to go up. So now's the time to buy. And guess what? This is not a secret. This is the law of the land. There's no prepayment penalty on residential mortgages. So if you're borrowing money at 7 and change and you gulp every month when you make the payment and interest rates come down 1.5%, also known as 150 basis points, refinance.
No,
Right?
wait, Mitch. What are you telling me here now? I've heard the headlines with these high interest rates that are just crazy high. It's the the headline that residential market's going to be in the tank. It's the demise of homes. What are you talking about?
So this is a true story. I did a segment on Fox News with Brian Kilmeade for his Saturday show, and the guest before me, and it was a pre-tape. The guest before me was Larry Kudlow, and I've been on the air with Larry a bunch of times. And Larry was beating the drum how the residential real estate market was in the tank and interest rates are high and it's Biden's fault. It was probably there was a lot of hyperbole in it. And I completely disagreed with Larry on that. And of course, what happens when you disagree with Larry, it ends up being interesting. But there's just no economics behind the argument that the residential housing market is going to crash. Here's a fact: there are over 4 million households that we've formed in this country, and a household formation statistically is when children move out of their parents' house. There's 4 million households that we formed for which we have not created a new supply of single family and multifamily. So guess what? Demand exceeds supply. All right. And we all took economics in undergrad, and hopefully we were awake and sober at the time we took the class. But when demand exceeds supply, prices go up. All right. So if we lower interest rates because the market lowers them, all that's going to do is create more demand. And, now I will throw the Biden administration under the bus. Every policy that they've talked about to help the housing market is all demand side stimulus. So that's not helping the problem. We have a supply problem in housing in America, and we have a meaningful supply problem. So I don't think when you have a supply demand imbalance like we have in single family and multifamily in this country, that we have to worry about prices falling. What we have to worry about is people getting access to housing. That's a legitimate societal problem. But from a homeowner's perspective, from a buyer's perspective, prices aren't coming down.
Yeah, it's supply and demand. It's a good point. But these higher rates have caused some homeowners to maybe not trade and maybe keep that
Mhm.
3% loan they have instead of going out and getting a 7%, right? So it has slowed down
Right.
transaction volume.
Right. So it's hurt the realtors. It hasn't hurt the homeowners per se. And I also argue often because the people who sell their homes, just sort of you think about it cyclically or generationally, people sell their homes tend to be empty nesters who have too much space. And most empty nesters aren't sitting with 7% or 3% mortgages in a 7% mortgage environment. They may be sitting with no debt. Their problem is being able to afford that smaller home, okay, relative to their basis in their existing home, plus the fact that there may be a tax hit for them when they sell that home because there's only so much exclusion. So we have a lot of, fiscal challenges and public policy challenges that prevent people from selling homes. But I don't think it's just blame it on interest rates. That's a cheap shot. I don't think that that's the problem. But I will say, your business is brokerage. Residential realtors are having to work real hard for commissions these days because the transaction volume is a fraction. In the height of COVID, existing home sales were like 6 million homes on an annualized basis. There was a 6 in front of the number. Now there's a 4 in front of the number. So we're down as many as 2 million residential housing transactions a year. That's a lot of people who aren't earning commissions.
Yeah, and it impacts the economy, sure. And now we're talking about the demise of real estate. Real estate's dead. Let's go back to office for a minute, and I want to share, my thoughts on why I think the office market is going to come back faster than we all think right now. Let's look at the employer side. Let's just use some one words and think about these words, audience. The impact of work from home and hybrid on recruiting, on retention, on onboarding, on training, on collaboration, um, on culture, on trade secrets, on turnover, on mental health. How about cyber security? I think there's a lot of reasons why these companies are starting more and more to get people back. So I think demand's going to continually increase over time from existing businesses. Here's the other thing that's going to happen that especially in Florida, Atlanta, and the Sun Belt, to all the way to Texas, and in a lot of other markets, we're going to continue to see growth, population growth, job growth. So there's going to be more demand. Now let's look at the supply side. We're going to have some buildings torn down. We're going to have see some buildings converted to residential, to data centers, to other uses, and I think that will improve. We'll see more and more of that as more governments and more municipalities are giving incentives for these conversions because they want the tax bases, they want the people downtown. And then what about new supply? There's who's going to give you a loan to build a spec B building, office building? No one. So if there is new supply, it's going to be ultra high end, which is not having any problem. So I think when you combine those, we could be looking, and then you look at the dearth of buyers in the market. So the prices on office are so low right now. I predict, and we can come back and look at this show right in 60 months. I predict the values of office properties in 60 months is going to be crazy different than we see now. There's going to be fortunes made with the folks who have the nerve to get out there and buy office properties in this market.
You know, this is a perfect play for private equity. And I wasn't looking for that much alliteration in my response to you, but private equity, if you're raising a new fund, if you had the right brand and you raised $1 billion fund to buy office buildings, and you have the stomach and cash flow to feed some of those buildings that may need to be fed, to pay the brokerage commissions, the tenant improvements, and all the things that you're going to do, you are absolutely right. 60 months or even 7 years from now, when that fund is sort of winding down, there will be fortunes that can be made. And in fact, some of those buildings that they could potentially acquire are going to be corner of Main and Main. Exactly. In some cities.
Nice buildings.
100%. Yeah, 100%.
And back to
and listen, yeah, go ahead.
Back to one of your points earlier about buying below replacement costs. I saw a quote from a major national builder yesterday to build a building, and I asked, "What do you have in there for escalations for the increasing costs over time?" She said, "Oh, Michael, that's really low now. It's 6%." So if we have replacement costs going up 6% a year, let's add that to the equation in 5 years.
Right. 100%. And in fact, listen, there's not a lot of construction contracts right now that are out there to build new spec office buildings. There's probably a fair amount of built to suit going on out there. But if you look at the big construction companies, you know what they're focused on? Building airports, roads, bridges, other infrastructure projects, because they know their bread and butter of building office buildings is over. They may build hotels. They can only build so many apartments in cities. But if you look at those contracts, they are written a lot differently as it relates to who's taking the risk of the increase in cost during the term of the building.
Yeah.
Right. Because when you scope out a construction project that's going to take 36 months, you're basing it on what the cost is today for steel. What if steel triples in price during the period? Look at what lumber did.
Mm-hmm.
Okay. In fact, a home that I didn't end up buying in Florida, I wanted to do something in the house that required buying 2 I-beams. And at the time, steel I-beams. Steel was pretty pricey at the time. The guy who quoted the job said to me, this is the price for the next 72 hours. Because I can lock up the price for
Yeah.
$72 on those I-beams. After that, all bets are off.
Yeah.
All right, I mean, like, so your point is so well taken. Reproduction cost, okay, that's today's reproduction cost. Who the hell knows what reproduction cost is going to be in 60 months?
Yeah, it's crazy. I'm selling a good number of office buildings from all sizes, from small 10,000 square foot buildings to extremely large ones. And the prices per square foot that I'm seeing that buyers can get these for. So a lot of investors are scooping these up. But another thing I'm seeing is a lot of companies, a lot of occupiers, users of space are coming and go, wow, what a great time for users, because not
Yeah.
only can they get properties that probably weren't available for them to buy, to your point, Maine and Maine. Also, they're getting incredibly low bases. They're solving the problem of vacancy. They're getting in extremely low bases below replacement costs. They're going to have, they're going to have really great windfalls, and we're seeing a lot of that happen right now.
Well, I'm gonna tell you a real sort of rip from the headlines story. So there's a maybe 300,000 square foot user that I know in a major city. I don't want to give them too much, and they were looking for space, and their tenant rep brokers showed them something that was an amazing space. It was almost completely built out. It's a professional services kind of firm, so there was a space that was already in the process of being built out for professional services. So it had the window office, the cubicles, the whole thing. The IT infrastructure was in place. The rent number was insanely low. And I had a conversation with the CEO, and he said, should I do this deal? This is not a client of mine. This is more a friend. And I said, 100% do it. And he said, I don't understand how this landlord's getting away with it. Like, how can they make money? I said, because the landlord is not absorbing that difference between what the market was and what your rent is today. And he goes, what are you talking about? I said, you remember the movie Moneyball? And Michael, I don't know if you do, maybe some of your viewers, listeners remember the movie Moneyball, but there's a great scene in Moneyball where David Justice is on the Oakland A's at the time, and he's in batting practice, and Billy Beane, who was a general manager of the A's at the time, has a conversation with David Justice about how he wants David Justice to be a team player and be a mentor to the younger players. And he says something, David Justice makes some comment about, the Yankees, where he'd come from. And Billy Beane says, let me be clear. He goes, the Yankees are paying a good chunk of your salary to be on the Oakland A's. He goes, the Yankees actually are paying me to take you off of their hands and off of their payroll. That is exactly what's happening in the sublease market today. $80 a square foot rent. I'm just going to pick like $80 rent. That's going for $50 for the new subtenant. The old tenant is potentially paying the $30 just so that they don't have to pay the $80.
Right.
Okay. And this is happening all over the place. So when we look at rental rates and rent quotes that are out there in the marketplace, they're completely distorted by the prime tenant subsidy that's going on out there. Certainly there's a repricing, but this will all work its way through the system. And I like your inflection point of 60 months from now. God willing, we'll both be talking and standing upright. But let's talk about it in 60 months. Pull this tape, because I guarantee 60 months from now, it looks a lot more like 60 months ago than it does today.
Yeah, good point. I mean, I'm seeing some incredible prices per square foot. I found a beautiful, beautiful building in Metro Atlanta, incredibly strong area. This is a building that a user company would come in and just their employees would just want to work there. It's just unbelievable, gorgeous, and it's 200 a foot to buy it. The replacement cost has to be 650 a foot at the
Yeah,
moment.
200 a foot.
Yeah.
200 a foot. You can't buy land for 200 a foot.
Yeah.
And guess what? I live in Florida. You're in Atlanta. It's a lot different than the Northeast or big cities like Chicago or Los Angeles, San Francisco. Okay. In Florida, my kids' friends, my kids live in New York, but my kids' friends who are working in Florida, they go to the office every day. How crazy is that? They go to the office every day. Do they not go sometimes on a Friday? Yeah. Do they not go sometimes on random days? Because right, but they have a desk. They go to the office.
Mhm.
They're more productive. They're more engaged. Everything you said in that list of things,
Mhm.
you have culture, you have recruiting, you have retention, you have better mental health. All of those things are the side effects, the positive side effects of people having butts in seats in offices. And Jamie Dimon, maybe one of the greatest modern CEOs of our time, modern day Jack Welch of sorts. Jamie Dimon's been telling people, get your butts back in seats,
Yeah.
right? And in fact, the culture of JP Morgan Chase is really strong because people are working, in the office.
Mhm.
You cannot build culture working remote. And in fact, I remember saying on your show, I think I did a segment with my dear friend and former partner Byron Carlock when I was in my previous firm before both of us retired. And I said on your show that Simon and Garfunkel or Lennon and McCartney or Jobs and Wozniak, or Gates and Balmer, like they couldn't have invented the things they did or wrote the songs that they wrote if they were working remotely, right? They did that stuff in their garage together,
You're
right?
right.
Or Simon and Garfunkel at their kitchen table in their apartment in Brooklyn. Like these things don't have the lack of innovation that we probably have. And by the way, all the companies that are truly innovating, right? All like the NVIDIAs and all these companies that are truly innovating, guess what? Those people are working together back in life. They're not doing it by Zoom.
Yeah.
And
Good point.
Is Zoom a good solution for ad hoc meetings to get people together? Yeah, but it's no way to run a company.
Yeah.
No way to run a company.
Yeah, and I'll share a couple other examples. We've covered a building on a lake, beautiful floor to ceiling glass, very good area of Atlanta, and it can be picked up for 118 a foot. And this building would probably cost 400 a foot to build it. And I would expect replay this tape in 60 months. It could be worth double or triple that in 60 months, in my opinion.
Yeah. No, and by the way, I didn't come on your show today to talk up your book for things that you're selling. It's the fact of the matter is I believe all of those things.
Mhm.
There are fortunes to be made. And my
Mhm.
firm, Madison Ventures Plus, that's just not who our investors are and what our business strategy is.
Mhm.
Um, but if we raise the capital and we raise sufficient capital to be able to feed those assets for that period of time, because that's the hardest thing to do, to continue to feed them. I think they're absolutely, what a great time to buy commercial real estate.
Yeah, I mean, good point. And if you guys are going to invest with me and buy office, don't do it. You have problems when you make a lot of money. You have taxes. You got to invest that money. It's just complicates your life, Mitch. Don't.
I have a neighbor where I live in New York who I always joke is the biggest complainer in the world. Like, and I've always said to him, like, if I handed you $1 million with no strings attached, your response would be, "Oh my God, now I have to deal. Got to go to the bank now." Like, if you have the stomach for making money and you don't mind sharing that money when you make it with the government, now's a good time to buy.
Well, I
I agree
agree,
with you.
and that's well said, Mitch. Thanks for joining us. It's good to see you. Thanks
You
for
bet.
being on the show again.
You bet.
I hope to see you in Hollywood at the Hard Rock.
The Hard Rock.
There you
What is it? But it's September
Seven-
17th through the 19th.
That's right.
The C5 Summit.
That's
There you
right.
go. I just did an extra commercial for you.
There you go. It'll be a good one. Thank you, Mitch.
All right. You
All
bet. Talk
right.
to you soon.
Thank you for joining us around the country. We appreciate it. And I know a lot of my listeners and viewers won't agree with me about the office sector. Let me know what you think. Share your comments otherwise. And we'll all replay this in 60 months and see where we are. But it's kind of interesting to see, as Mitch said, back in '09, that housing was dead forever. It was pretty bad at the time. And you look at retail; it's been called dead a few times, and then now it's going great. So think about if you're looking to buy, sell, lease office space, do anything. You're a lender, you're a borrower, you want to invest. Hey, please call me. I focus on office, and I like it, and I'm focusing there on purpose right now. All right, thanks for joining us. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by CCIM C5 Summit. We'll be at the Hard Rock Hotel in Hollywood, Florida, September 17th to 19th. Visit c5summit.realestate. By CREI Summit. This will be in Atlanta, Georgia, September 11th to the 13th, right here in Atlanta, Georgia, where we're headquartered. Visit cresummit.com. By Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By Commercial Agent Success Strategies, 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.